just one look in, you know I'm good to go. You know I'm good to go.
Hello, everyone. This is Kamyar with Minds of Commercial Real Estate. Today we have Kaaren Hall with uDirect. She helps with retirement funds and being able to invest those into self-managed stocks and real estate or anything of your desire. Kaaren, thank you for being on the show.
Oh, hey, thank you.
I came to one of your, so I've been on one of your conferences with Ben Soifer, and I kind of learned a lot about what you do. So I would like you please, give us a background about yourself.
Oh, wow. Yeah. Well, thanks. And yeah, so self-directed IRAs, man, you don't like grow up hoping that you can self-direct IRAs when when you're big, right? That's not what your kids are dreaming of. But you never know how you like come into things. So for me, it was first I was in radio for 17 years. I made the logical transition into real estate as a property manager and a realtor. And later on, got into mortgage, got into loan servicing, got into origination. And this spans many years until 2007 when I entered the self directed IRA space. And then he was working for another company. And then in 2009, opened uDirect IRA Services.
Oh, congrats. But tell us about more what the exact services that you offer.
Right. Well, what we do is we allow and give people a vehicle to take their retirement account from where it is, move it into a self-directed account, that kind of vehicle, and then invest in alternative assets like syndications and, private equity, notes, maybe cryptocurrency or precious metals. You could invest in a lot of things like notes, but like performing and non-performing debt, or your IRA self-directed account could be the bank and lend money to other people. So just lots of different things. Anything that falls under that alternative asset category.
So does the retirement have to necessarily be a IRA, or can you do that with a 401k? Are there any restrictions?
Right. Well, I mean, the genesis of the funds would be in a 401k or an IRA. So if the funds are presently in, say, an employer plan, a lot of times you can't move that money over until you leave the service of the company. If it's an IRA, you can transfer right away. But once it's in a self-directed account, that can be a traditional, a Roth, a SEP, a simple, a spousal account, inherited account, or a solo 401k, even an HSA, a health savings account. So it's like 8 different kinds of accounts that can be self-directed.
Yeah. So let's go through a particular scenario. Let's say we have a couple that have about 500,000 in their, combined IRA, 401k. They're both retired and they want to take advantage of your company and services. What would be the steps involved?
Right. Well, you talk about a couple. So understand that these accounts are individual. So each person would have their own individual accounts because they are IRAs, individual retirement.
Sure.
So we'll start there. So they each would open an account. And then depending where they are, if it was a previous employer, that would be a rollover process. If it's an IRA, it would be the process of a transfer. And it happens really fast on our business platform because we give you a digital application, you complete it, and part of that, process is starting that transfer, that movement of money. So they open the account and then they're getting it funded. And while we're waiting for this third party to get the money in, we can be reviewing the investment documents, getting it all queued up, so that when the money comes in, that they can then invest. Or if they want to just hang out and shop for properties for a while or shop for opportunities, they can do that too. They don't have to invest immediately, but they typically can straight away.
And how long does this process take?
Yeah, opening an account is maybe, 20 minutes, 15 minutes max, just going through the application because it's going to ask you the basics, your name, your address, the sort of things you would put on an application if you're opening, say, a checking account, same sort of thing.
Right. But once you do the initial application and then, does it matter if it's like in a 401k or an IRA, the amount of time that's get transferred? What are the typical time frames for the transfers?
Yeah, that's a really good point. If it's a previous employer plan, they're going to take a little longer. And they're going to give us a check, and we've got to hold time on checks because we want to avoid that clawback period that could happen. So it's about 2 weeks if it's a rollover because of all these things. But if it's an IRA, it could be a week or less to get that money.
And you mentioned, so once it comes into your platform, you have like a kind of an online access where they can access their funds. And then do they have to specify where they want to locate, place it?
Exactly. So that is the crux of a self-directed IRA because we're not advisory. We're not offering any assets. We're not telling them or suggesting things for them to invest in. So it's self-directed. So yes, they must tell us what they want to invest in. And typically that an account holder would do that by providing us what we call supporting documentation. And that would be the contract or what have you. If it's a note, it would be the note, whatever the agreement is, understanding that it's the IRA that's the investor and not the person, the individual. So that's how that goes. So we would get that information, review it, and assuming that we didn't see any problems with it from a administrative point of view, we're not vetting it to say it's a good or bad deal, just to be clear. But assuming that it all looks good, then we queue it up, and once the money is available, then we can fund that. And now the IRA has self-directed. And then all the proceeds of that asset have to go back in the account that owns the asset. And the asset sponsor should never make the check payable to the people. They should always make the check payable to the IRA account to avoid any complications.
What are the costs associated?
Yeah, I mean, there are a lot of different companies. I have a favorite, and our fees are really great. It's a $50 setup fee. And the annual fee is a flat fee of $275 a year, whether, there's one asset in there or 10. It's regardless of the number of assets. So $275 a year. And there you go. So the first 6 transactions over the lifetime of the account are free. And each year, the first 12 checks that come in without a fee as well.
Yeah. No, let's say an individual has money, they put it into a syndication of real estate,
Mhm.
and then that their syndication sells that property. The money comes back into to your account for them.
It must. Yeah, it must go back into the account that owns the asset because if it went to the individual and they cashed that, that would be what we call a prohibited transaction. And that's kind of the thing about the game of self-directed IRAs is you want to like keep away from prohibited transactions because an IRA is like this, this like tax protected bubble and the asset is in there not being taxed. But if there's a prohibited transaction that bursts the bubble, it becomes taxable to the account holder. So you never cash a check for it personally for an IRA owned asset. That check always goes to the account that holds the asset.
And they make multiple investments with their uDirect account.
Right. I love what the IRS did with this one because with an account, there's no limit to how many assets you can have in one account and no limit to how much those assets can earn. I mean, there are contribution caps, how much you can write a check for and put in your account, but there's no limit to how much uh, that account can earn.
Got it. So you mentioned something about, donating. So let's say we have couple, they each have their own IRA. At one point they both like leave their jobs, but they come and convert their IRAs or 401ks into a uDirect account.
Yes.
After that, they're allowed to make donations into their uDirect per the IRS codes.
Yeah, we call them contributions. And so every different account type has its own rules about contribution. So it depends upon your age, your account type, and your income, actually. Because, for example, if it's a Roth IRA, you could make too much and then not even be able to contribute at all. That's why you've heard of the backdoor IRA, where you can contribute to a pre-tax account and then convert. Anyway, I'm getting in the weeds, but those are the 3 things. So yes, you can contribute to the account and help it grow that way.
And what about defined benefit plans? Are they able to convert into a uDirect account?
They are, yeah. Typically, they have to be dissolved,
Okay,
like any other employer plan. But yes, I mean, yes, they're also transferable.
they're transferable. Anything the viewers should know about uDirect, or because it's not a big, not a lot of individuals or couples know about it. What should they really, look out for? What should they know?
Right. Well, our industry is small, and so you're not going to see us on a Super Bowl ad, for example. I mean, that's not going to happen. So you want to know that your money is safe, and so uDirect has been around. We're in our 16th year. We're the employees that handle the money are bonded and insured against theft and fraud. And myself, I sit on the board of directors for the Retirement Industry Trust Association. So does that I kind of got off track there. Am I answering your question?
No, you're answering my question. Yes, yes.
Okay.
Yeah, because I mean, obviously, the first question anybody would ask is like, "How is my money safe when it's converted
Right.
into uDirect?" So you answer that it's with insurance. You said right? That's backed by insurance.
Well, there is FDIC insurance. There is some like retirement accounts are limited to 250,000, right? That's what the federal government gives. But understand too, it's not the assets once you've invested, it's the idle cash.
Well, I mean, you pretty much answered my questions. Is there anything else the viewers should know, or
Oh, there's so much.
like what are some like I would say the top 3 or 5 items they should know?
Yeah, I mean, so let's talk about an asset class in particular, like let's say syndication. So if you're going to invest in the syndication deal, what's really important now is due diligence because the 3 steps I say of self-directed IRAs are open, fund, invest. Get the account open, get that money in, then you can invest. But before you do any of that, you want to do your homework. You want to do your homework on the deal. So what do you do? How do you do homework on a syndication? I mean, these are private and usually there's not a lot of information. So there are ways to do that. A way to do due diligence on a syndication is to talk to other people who've invested with that GP or that syndicator, right? Talk and see how have your returns been. Have how has it been for you? The second step is you could go online and Google, and see is this person involved in any litigation or anything like that. Definitely a red flag and something you want to know. Readily available usually on the internet, and you definitely want to look before you, send your money over. And another way, also on the internet, is FINRA. FINRA is the enforcement arm of the Securities and Exchange Commission, and they have this website called Broker Check. So anybody who is working with the SEC and raising capital is probably on Broker Check. And so you can look them up and see if there are any grievances against. And maybe, sometimes grievances are founded, sometimes they're not. Sometimes, like we had somebody not do this due diligence, was about to send 500,000 into a deal without realizing that the asset sponsor had been literally incarcerated for 2 years by the SEC, and they were going to send their money to them. So they didn't after doing a little more checking. So due diligence is one incredibly important portion of investing using retirement money because it's precious. It's not easy to replace. You're limited by these caps of contribution caps.
Right.
So due diligence is one really key element.
Got it. Got it. Anything else?
Yeah, I think too that there can be a tax. Again, we're going to talk about syndications because I know that's what you love. So if people are investing in a syndication and the asset sponsor is taking on leverage, now you're not borrowing, your IRA isn't borrowing money, but the asset sponsor, part of that deal is leverage, and your IRA comes in as an equity owner. Now your IRA can invest as a debt or equity partner. If it's a debt partner, the IRA makes a loan to the syndication. This doesn't apply. But if the syndication's taking on debt and the IRA comes in as an equity partner, then a certain kind of tax can pass through from the syndication to the IRA. And that's called UDFI. That's the name of a tax, unrelated debt financed income tax. Now, you can read about this on the IRS's website, irs.gov, and its publication 598, where you can read about this tax. Now, if you owe the tax, every year your IRA will file a document called a 990T. Like when we do our taxes, we do a 1040, right? And an IRA fills out a 990T. Now, depending on, so I'll explain UDFI. The IRA is taxed based on the percentage of return the IRA received due to leverage. And that's a calculation that the asset sponsor will do and demonstrate on the K1. So there's a tax. But like a lot of other taxes, you can reduce that tax through deductions. Like say, for example, the syndicator does a cost segregation that can pass through to the self-directed IRA holder. Now, these are things to talk to your tax professional about. Anytime, any investor needs a good tax professional and a good lawyer to review the contracts, right? That's any investor for anything. And so talk to your tax person ahead of time. Say, look, I'm investing in the syndication. This syndication's taking a leverage. I'm going to need to file a 990T. Can you help me with that? Do they understand it? And do they understand self-directed investing? If they don't, they can call us and we'll bring them up to speed. But you want to have a good team of advisors on your side to make sure you're doing.
Well, thank you for all the great information.
Yeah.
And if the viewers want to reach out to you, what's the best way for them to reach out to you?
Well, you can set up a 20-minute consultation by making an appointment, and that's on our website. It's uDirectIRA.com, our website. And then just hit contact us and schedule an appointment at your convenience. Email us, with any questions. And, we've got phone numbers. Those are on the website too. And we have a really robust blog with all kinds of articles on the things that you would definitely want to know. And additionally, let's see, where is it? It's right here. Additionally, I want to let you know that I just published a book. This is The Bigger Pockets Guide to Self-Directed IRA Investing. And you can find it on the Bigger Pockets website, biggerpockets.com/SDIRA for self-directed IRA. So this is a great guide that'll take you through the technical aspects of self-directed IRA investing, a little bit of the history of the IRA and this sort of thing. So it's a great resource.
Great. Well, congratulations on the book. Thank you for being on the show, and look forward to doing business with you again soon.
I appreciate it. Thanks so much.
Thank you for watching. If you enjoyed this episode, please give us a thumbs up, subscribe, share any questions or comments in the comments below, and follow us on social media. I look forward to seeing you next time.
Let's get together.